Happy Tuesday, everybody. Sort of straight down right at the open here at the lows for the day. Take a look at the sectors. Defensive tone, consumer staples were up, utilities were up. But you see here, energy's a little bit on the weak side, tech's a little bit, and consumer discretionary is weak. And of course, that's where Netflix is and Amazon as well, down 0.76%. Take a look at the FANG names. It's encouraging that the rest of the FANG is not dramatically selling off. I have a big problem with the narrative of a lot of people, which is, okay, the market is mostly the FANG names this year. That's the biggest contributor to the S&P 500. If the FANG names start moving down, the whole S&P is going to go down. I have a problem with that narrative because it doesn't really comport with the actual facts is. There's plenty of ways to make money, and it's wrong to say that FANG is everything and nothing else matters. Let me just show you here with the S&P 500 for the year. We're up 4.6% year to date. The percentage of stocks advancing, 52%. Okay, that's not an amazing number, but it's a majority. The breadth is positive overall, and yes, market cap matters, but you can make money a lot of different ways. Look, 80% of technology stocks are positive for the year. Almost 70% of healthcare is positive this year. This is the advancing. Energy stocks, 61% of the stocks in energy are up this year, 56% are up in consumer discretionary names. Elsewhere, if you just would have owned these separate sectors, you would have done fine. So technology, you would have owned that. It's up 15%. Okay, that's FANG are very important technology. But look at oil and gas. Look at the Russell 2000. Look at aerospace and defense stocks. Look at healthcare. You didn't have to have FANG stocks to make money this year. You would have owned these other ETFs. You would have done fine outside of FANG. My point is, it's not all about FANG, even if the market cap is really heavily weighted at that point. And by the way, about this whole crisis now that Netflix is having, remember, we've had plenty of FANG stocks before with other existential crises. Apple had one. Remember the big Facebook existential crisis back in March or so? What did we go from? I forget the number. We went from 185 to about 150. You see that group there in the middle of Facebook when it had that big crisis around the whole advertising? Everyone said now they're going to be in trouble. The momentum people are going to abandon them. What happened to that whole narrative? It turned around after going from 180 to 150. I think 150 or so was the bottom back there a few months ago. And look at that rally since then. So all the people who are out saying, oh, the momentum guys are going to abandon all these names, including Netflix, and everything's going to go to hell in a handbasket. Number one, the rotation we've seen in the market this year with other sectors does not support the idea the S&P is going down. And number two, there is no evidence necessarily that momentum players are going to completely abandon the FANG names. We've seen them turn around on that before. Enough said about that. Let me just go to Charles Schwab. I like watching Charles Schwab because it's a good indication of where's the retail trader going right now. And their numbers were pretty good overall. They beat the numbers. They've had a tough year because February was really hard on them overall. But just take a look here what they said. We had record trading for the first half. We were up, 29% year over year. That's the trading was up. 29%. We saw retail was up 46% net new assets, and advisor services were up 24% net new assets. The bottom line here, Carl, is that more people are putting more money to work in the stock market, and that's a good sign.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.